It's our pleasure to welcome back to the show Chief Strategist for Interactive Brokers, Steve Sosnick. Steve, thanks for coming on.
Hey, it's always a pleasure to join you guys.
Before we start, you've done this gig before. You know the drill. You brought your own beer. What are you drinking?
This is probably a summer beer, but I have Ripe and Cranky Passion Fruit Juiced IPA by the Stony Creek Brewery of Brantford, Connecticut.
Wow, that sounds like something Patrick would like. Local. Patrick likes the fruity beers.
Oh, there we go.
Nice. Well done. Well, cheers.
Cheers.
How does it taste? Is it a winner?
It is. You have to like a fruity beer, but it's good. I've had this. I should be drinking it on beach weather, not when there's 18 inches of snow outside. I'm sorry, 40 centimeters of snow. Yeah.
You guys got hit really bad. Did
you
guys just shut down when that happens?
Well, this is, I guess, the beauty of work from home, right? Is I don't have to fight it. I mean, the one thing I really don't miss is about market making. Although there is a lot I miss, is like days where it's snowing and trying to fight my way into work to open the markets because I couldn't do it from home. And now, work from home, I just sort of like, it's pretty out there. I hope the plow guy comes and,
That's funny.
Okay, so let's talk about the market. What's been on a lot of people's mind has been this GameStop. And you wrote a terrific article that walked through how it was that more than 100% of the float was short in GameStop. It doesn't seem like it's possible. When you think through it, you're supposed to not short unless you have a positive affirmation of the borrow. So it shouldn't be possible, but you walk us through how this could happen. So could you do us the pleasure of kind of giving us the synopsis and explaining it to us?
I would be glad to. It's amazing how much traction that single piece. It's probably the most read thing that's been on our website, certainly recently, if not ever. And I'll just give a plug to Interactive Brokers Traders Insight, which is where you'll be able to find it. The question was actually asked of me by a reporter, and she said, she's a reporter at Bloomberg. She was looking at her terminal, writing a story, and said, I see the short interest in GameStop at 143 or 144%. How is that possible? Or did we, meaning Bloomberg, make a mistake? Which obviously people at Bloomberg, don't like to process the idea that they might be wrong. Which is, with the amount that everybody's paying for it, they really better get it right. And so, I looked into the numbers and said, wait a minute, they're not wrong. That is what's being reported by the exchanges, but how is that possible? That would imply that there's this huge naked short out there. And yes, naked shorting has largely been stamped out. You really have to have some sort of affirmation of a borrow. And if you can't find that, first of all, you're not supposed to lie and say you have a borrow. But if you somehow squeak out a short sale without actually really borrowing it, which can happen because you're told by your prime broker that you can borrow it, but they meanwhile lend the shares in the meantime to someone else. So it can happen, but you have to cover it. It should never be that way under any normal circumstance. So I asked our stock loan guys, how is this right? Is this possible? How can this be? And various of them, this is one of these opaque little secrets of stock loan land, which, by the way, is really one of the truly few remaining opaque areas of the markets. Good luck finding out really good detailed information about stock loan rates and short interest and things like that.
Yeah, but I'll just interrupt you for a quick second. The stock lending guys were always the shadiest of shadiest guys when it came to on the trading desks, and their Las Vegas conference legendary for its debacles.
Yes, yeah. You know what I mean? I think of it this way. This is like. It's still one of the, for the most part, there are no real over-the-counter, blind markets, blind when I say blind to the public and kind of blind to each other that exist. I mean, they spread sunshine into the municipal bond market, all these little corners, but somehow stock loan, it's still a world of, private dealing and stuff like that. And so when you have a situation like that, it's ripe for a conference like that. Let me put it that way. I remember the bad old days of the over the counter crime family conferences. Where, those were there was a lot of room for debauchery there, and so that this is one of the places that where it can still go on, I guess. It sounds like I wish I'd gone to that conference. I will not call my stock loan department felonious. They seem like a very solid group of men and women, and I'm not gonna go that far as to cast any aspersions on them.
It was only me. That was a Market Huddle opinion only.
It's not a unique opinion out there in the world either. But I'm gonna stand up for my people. But basically, so in looking into it, there's an interesting little flaw, and that is that let's say broker A is long 1,000 shares of stock. Okay, he's going to want to lend it out, especially in the case of a GameStop, where it's hard to borrow, and therefore you're most likely looking at a severely negative interest rate, meaning you get paid to lend your share. You get paid over and above the normal rates to lend your shares, and so broker A lends it to broker B, who has a customer who sells it short. Those 1,000 shares are received by broker C, and they're delivered to him in good form and proper time because the borrow is good. Broker C, his stock loan department, looks at it and says, "Oh, I got 1,000 shares of GameStop. I can lend this out at a really good rate." Broker D calls broker C and says, "Have you got any GameStop?" And because I got a customer who wants to sell it, and broker C says, "Yes, I do. Here's 1,000 shares." And he lends it to broker D, who sells it to broker E, who doesn't know if those shares are borrowed or lent either. And so it goes. And you can get into that situation. It's I don't know, reauthentication, rehypothecation. I probably don't have the right actual verbiage there, but basically the same shares can be relent in good faith. Of course, you see the problem in this scenario. If the customer broker A decides he wants to take a profit on his shares, that means all the other people in the chain have to then go out and scramble to get their shares back.
Right.
And that is the combustible nature of a short squeeze. But going back to the original premise, this is something I didn't know until I wrote about it, was that it's legal. I mean, let me start with the premise that short selling is legal, ethical, and an inherent part of the investment process. So I'm starting there. But obviously, naked shorting is illegal. But this is not naked shorting. This is just a bunch of independent actors all acting in good faith. It's weird.